Good morning, ladies and gentlemen, everybody, boys and girls. Welcome back. Another beautiful day here. Again, good morning. Good morning. We're going to cover it all. Bitcoin, the market, maybe some penny stocks, pretty much all the goods. Looks like, what else we have going on here? President Trump, something about Greenland, something Greenland. Yeah, I don't really know. I'm not keeping up too closely these days with the old politics stuff. So, can't really say I know for sure what's going on with that. So, won't speak on it. What day is it? Wednesday, right? Yeah. Construction spending, pending home sales. I'm assuming pending home sales probably won't be great. That's kind of to be expected. So Bitcoin just coming off the daily / weekly VWAP support area. So this is just an expected bounce spot. Obviously, we already know that the market is a little bearish for Bitcoin. There's really no surprise. Again, you guys know, well, you guys, there's one of you guys watching, so just you. You know as well as I do. We've been talking about the market on Bitcoin. We're always talking about Bitcoin, but obviously market down to here would be just kind of choppy sideways up to about there, maybe 102,000, and then we would do a lower high and come down. And so pretty much where Bitcoin's at right now is an expected sell target after we found a lower high up here and come down. So again, Bitcoin has ultimately just gone through a sell-off, consolidation, bounce back to resistance, sell back to demand locations, one of which is right there. So we're just going to bounce that for the moment. Now, all of our targets on the upside currently I will map them off. You guys will have them in a second. So just know these price targets will hit. They will not hit. It's pretty much guaranteed no matter what at some point in the future. So we can pretty much just, there might be more than that. It's dependent. So pretty much that box on the upside is now our trailing resistance long target. So if, you can see support, up, back down, support. So this is support for the moment, right? Now, how well does this support get used? We'll see. And when I say how well, it's just the formation it's different now, right? See, in the past, it was down, oversold, reversal, back up, pull back, create support off volume weighted average price, try to continue up, lose momentum, pull back below VWAP / area, hold support, etc., rally back up. Now, I don't even know how I deleted that, but now, whoa, that's not it. And now we come all the way back down. You start breaking some structure here, but volume weighted average price is holding support. So pretty much what that just means is right now we're at in my view, we're at a temporary support. But with all of the selling that was just created on this leg down, we should not expect that this holds support and then rallies back to the high or higher for the moment, as there is too much downward trailing pressure that we would expect would at least attempt to lower high Bitcoin's price action on the daily chart from this last leg. So this last leg down has enough downward pressure that we'd expect that, again, volume weighted average price just trailing down will create a lower high or attempt. So we would expect price to attempt that first before rallying all the way up. That's a lot of drawings, that's a lot of talking, that's a lot of this, that's a lot of that. Again, to put it simply, it's just we're at temporary support, price action trying to bounce. That attempted bounce will be met with trailing resistance sooner than later, where we'll look to resist Bitcoin again and then take it down once more. All right, so that's that. There's also price levels that are still below this current price that we're looking at taking the market down to. It's just a matter of getting through the current support level, which we've obviously identified here. Hence the red candles on the daily chart, right? Daily red, 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 back to green. So there's been a little bit of an algorithm shift there, if you will, potentially. So yeah, anyways, that's Bitcoin. Pretty straightforward. We still got price targets on Bitcoin down to like 60,000, 50,000. So that's pretty much where I'm expecting the price is going to be going anyways. We've been expecting that for a couple of years now anyways. So yeah, we'll just keep working with that, and when the time comes and Bitcoin's ready to be bought, we'll talk about it. But again, this is all just still short-term price action in a longer-term cycle, which we expect to go down towards, again, 60, 50,000 in that area. So that should happen probably sooner than later. All right, stock market now. Obviously, yesterday we... Hold on. Yeah, that's fine. Yeah, so obviously yesterday regarding the market, we had mentioned that it was in a neutral to bearish state. And let me double check. I'm not sure if we did the 161 move. I think we might have done our gap down, gap and go to 161. Yeah, well, we might have had to do it in the after hours. So for those of you that remember, if you two were watching yesterday, which maybe you were, you will know that we mentioned, hey guys, we have a gap down. And pretty much if the market wants and is willing, then the downside destination target would be 161 because of how big the gap is. It's just that's the gap. Extension target would be down here. Sometimes it's less likely to do on gap downs, blah, 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 blah. But just in general, it's just here's your gap. You measure the overnight gap. If the market is successful at providing a gap and go, a gap pullback and go, it would then go to the 161. And now you can see market is down towards 161 pretty much. And if we look at the price action of SPY in the pre-market, we can see it went lower than yesterday's low, so then obviously that would mean the 161's hit, blah, 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 yada, yada, yada. But anyways, so you can see gap down 161 pretty much ended up happening yesterday. That's good, but really the full story here is that the market is simply below its 50 SMA, so therefore, all right, so again, 50 SMA, that's where it was yesterday or 2 days ago. Anyways, it breaks down. Yesterday, market, we have a gap down. Market gaps and goes below 10 SMA, blah, blah, blah. So what's that mean? It just means the market is still in a neutral to bearish state. We're not long bias market participation right now. When the market gets back over the 50 SMA, you will see higher lows in the market attempt more of a rallying effort, if you will. So yeah, that's pretty much that. Obviously, if you look at the news, all the news is going to be bearish right now in the market. Whether that be the market's down because Trump's pressuring Greenland or pending home sales or Jerome Powell sucks, climate change, whatever you want, doesn't even matter. But the news will be bearish. So again, articles and news outlets are just going to use whatever they can to spread bearish narratives right now because the market is down. Since it's down, people are more fearful, so obviously that's just what's happening. So before you know it, the market will be back into a buy signal and rallying, and then the news will be positive. So unless we actually go into like an actual bear market, which you guys know, well, the one of you, the one person watching, you know that we've been discussing a bear market or maybe a recession or at least a correction starting in the year of 2026 for the stock market. So obviously we're positioned more defensive going into the 2026 year in the assumption that that prediction would be right. Now, if we're wrong, that sucks. But if we're right, cool. So anyways, that's that. What else do we have to cover? The volatility index we should probably discuss a little bit about. Also, PAVM. This is a penny stock that it's actually really, really interesting. Yeah, it's actually a good setup today. Just so happens that on PAVM today, that the 30-minute SMA, look at this. This is pretty cray for the one person watching. Yeah, so this had the 30-minute SMA priced at 757, and it had the 4-hour SMA priced almost exactly the same, about a 457, like literally right about the same price point. So it's kind of rare. I would say it's very rare that you end up seeing a stock where the 30-minute SMA and the 4-hour SMA are lined up at the same exact price point, because then it creates like a double breakout. So I would say, so this was a good setup, and I was watching it, and I even said to myself, I'm like, oh, this is a good setup, and then I end up looking at like an email or something and covering the screen and then coming back to it and it kind of exploded. I'm like, you're an absolute idiot. Like, you literally, but that's okay. I did take a trade on it, do okay, but I definitely missed most of the big run there, unfortunately. So it's not even, I'm not really mad at myself. It's just, sitting here every day, for so long, and then a good setup comes around and you end up just not really focused. And I'm like, well, that's what you get for not being focused really this morning. But anyways, so yeah, this was a pretty good setup in the sense that, again, we always discuss here that the risk to reward factor was all there this morning, in the sense that we know uptrends and breakouts start over the 30-minute and the 4-hour, and the fact that they were both lined up pretty much at the same spot, you could see this morning pop right into the 4-hour and the 30-minute, pull back resistance, and then there's your flag pattern, if you want to call it that, and then there's your break over the 30-minute and the 4-hour, and wham, right? So that was a pretty good setup today, and it was something that anybody who was up before the time of 8:15 in the morning, 8:20 in the morning, if they were scanning and looking around, you could have found that one like I did and then still miss it. But anyways, so that was a good move there this morning. Okay, over to the volatility index. So this is some other areas of importance. Yeah, so obviously the volatility index is up. So with the VIX being up, fear's up, blah, blah, blah. Pretty much just means once the market goes back below this level and the 1 hour, then we can maybe start looking back at more longs on the market. And this is one of those things, it's kind of interesting. We've been seeing the volatility index up over weeks now, and the market not really pulling back, and now it's kind of started. And this is something we discussed I think last week or maybe earlier this week or some point, I don't even know, but anyways, it's something we have talked about, which is it's been interesting to see the volatility index up over the past couple weeks, but the market not really having any negative reaction. It's had a couple blips there, but you can kind of see that over the past couple weeks, the rallying on the market's been very lackluster. I don't want to say lackluster, but it hasn't been the greatest. It's been good. But you can see here, this rally up, a couple days later, whacked right back down. Again, this rally up, pull back, stale, dropped out. So we're definitely seeing a little bit of weakness there in the market, which is okay, completely fine. But we have been seeing a little bit of that weakness, which is kind of interesting. So, yeah. What is that all leading me to say? That was all leading me to say, yeah, duh. Yeah, duh, obviously. So, yes, with the VIX being up so high, you'd expect something's kind of getting shaken up in the market, which it just did. So what's the play? The play for anyone who wants to be a long bias trader is you can just start buying into the sell move on the market right now and hope that it turns into a buy signal sooner than later, and then you make money. Or, well, there's more risk elevated with that. Or you could just wait until the market goes into its next buy signal and then look to trade long bias, and you'd have a better opportunity of getting along with less risk. So do whatever you want to do, right? And then if you wanted to be bearish the market, obviously looking back, and not only looking back, but it always is, right? It's never hindsight 2020. It's always, well, partially hindsight 2020. But if we just look at where the 50 SMA is at, right? So if you look at where the 50 SMA is at, it's currently it was up here, right? So we know that the lowest risk opportunity to have gotten short would have been arguably right here when the market broke down the 50 SMA, right? I didn't get that, okay? And then here's your gap down as the market breaks down the 50. There's your continuation of the short off of yesterday's gap down, right? The best time to get short is not today in the pre-market on this low after the market started its breakdown all the way up there, okay? So, what is our play here on the stream? The play on the stream is to be long bias when the market gets back over the 50 SMA. Otherwise, we will be looking for counter bounces to lower high moves in the shorter term trading environment. So I guess you could say the shorter term trading environment is a lower low, lower high setups until the market recovers the 50 SMA, at which point we will look for higher high, higher low setups. Still looking for still looking for silver to get up towards the $100 mark. That would be great. What else is there going on in this world? Don't know. All right, well, I'm going to take a moment and just, well, I guess that's fine. I'll just shrink it. That's cool. Yeah, I'm going to take a moment and scan through some penny stocks. Let's see. That's kind of interesting. Yeah, PAPL could be interesting above $1.40 to, well, what's the all the way down to $1, right? $1.40 to $1.14. But if you go to $1.14, you're gonna lose that. I mean, it's got some potential. We'll see. Yeah, PAPL. We'll see if this gets activity. If not, it's just gonna drop back. I mean, pretty much the downside destinations right now for PAPL are $1.39 to $1.14 in the event the uptrend doesn't last. That all also kind of has an interesting look. There's nothing currently breaking out at low risk levels, but that's okay. 9:30 market open, okay. Oh, I gotta sneeze, excuse me. Oh, man, that's better. Actually. What can I make? Yeah, we'll change that later. All right, Bitcoin is bouncing well right off support. Again, for the couple of you that are here, you guys know this morning we had mentioned this is our daily and weekly volume weighted average price support. So the fact that we're kind of bouncing down here, kind of to be expected. It's a pretty strong level, so yeah, it's totally normal. And then our price targets right now back up are going to be 92,000 and 94,000 right now. Given that support actually holds, right? All right, so far since the open, you got a couple of the magnificent tickers down. Pretty much everything's kind of a flat open so far. Nothing is just going one way or the other. That's a little too scrunch for my liking. That's better. Yeah, I'm just kind of figuring out which way we're going to move this market in a second or two, I think. Weird. Okay. Yeah, I do think we're going to be looking to pull the market back down this morning. Maybe even down towards like 677, 78. We'll see. I mean, that's kind of like the trailing up support. So, I mean, right now we're into some 30-minute stuff. But yeah, we'll see. I mean, that's where the volume weighted average prices are at for the moment. Bitcoin doing well off that support. Nice rally. good morning, you four beautiful souls. Good morning. Good morning. Yeah, SPX starting to roll over. Well, I would say starting to roll over. It's really one candle. Nothing too crazy. QQQ pulling back some more there. SPX not really pulling back too much, but starting, maybe. Working its way in that direction. Again, 30-minute volume weighted average price is on the low. If we do end up kind of breaking this down, that'd pretty much be the pullback target there. I can't say we'd be looking for too much more than that for the moment. And so far, it's holding up okay. I mean, still on the day, pretty much everything is flat. I mean, NASDAQ flat, Magnificent 7 flat, S&P 500 issues a gap up, but pretty much flat. So really right now in the day, there isn't a whole lot currently running to drive the markets up. There's really nothing pulling back for the moment to sell them off. Busy chat this morning. Busy chat, guys. Busy. Silver still about 85 right now. BNAI. Interesting. Again, market's still in a neutral to bearish state. We haven't really changed that. And actually, you know what? I kind of forgot. I should be looking at something else here too. So that would be the last calibrate the toss of May. So that means that. Okay. Could be looking for that. Alright, I think we're all good. Yeah, we'll also be watching our sell signal volume weighted average price, which is currently at about 68276. So that's another thing we're going to be paying attention to. If the market does not get above that, then Again, we're still in a full-blown pretty much sell move, potentially. We are. I mean, that's pretty much it, you know. So I'll try to draw something on the screen for you guys and make it simple, which is pretty much as long as the market is below that blue line that I just drew to, then we can still roll the market there, right? So just be mindful of that. And the market pumps. And the market is pulling back. Oh no. Well, I wouldn't say the market's pumping, I'd say the market's pulling back, but you know. So remember, current kind of shorter term pullback targets for the market SPY is going to be that just that green box on the downside, give or take a little bit, and that's just because that's kind of where the volume weighted average price is at. It's nothing really fancy. Just tends to be a common area we pull the markets back to on a day-to-day basis. Not all the time, but you know, relatively close to all the time. So QQQ is down. So QQQ probably already did it. So if we look at the volume weighted average price of the QQQ this morning, and we take a look at the lows and this kind of like breakup area, not quite. So we still got arguably room there to those guys. So put QQQ down about 607. And that would put the SPY down a little bit lower. So there's still some work to do to get those exact prices we're looking for, but we'll see. Oh, no questions? No questions. Okay, perfect. Wow. Not bad. Okay. Just a heads up too, we added some more to the M1 portfolio. I think that was yesterday. Basically, as the markets are going on sale here, we're adding some into that longer term portfolio. And we say on sale, pretty much the way I view on sale is anytime the market breaks down the 50 SMA and goes into a sell move, we're theoretically on a bearish sell side move. Therefore, the markets will be on sale because when they flip back to positive, a rally starts. So now, obviously the risk with that is that the markets can always keep going down if they want to, right? But bottom line is over the long term, right, the market would be on sale, the market is on sale, the market would be on sale. Right now the market would be on sale in theory. So I have added a little bit to the longer term portfolio there in M1 just yesterday. And so, yeah. You know, what's funny is like on the dollar cost average portfolio, right? So the one that we started pretty much for the purpose of this stream, and I'll show it to you right here. So this is what I kind of find a little interesting is, so this one here, right, we've been kind of testing. Oh, that's interesting. It actually just changed. That's weird. I did not say that this morning when I was looking. All right, so, you know, this one is, so the simple dollar cost average portfolio is basically matching the market right now, which you'd kind of expect or you kind of hope for, right? It's just a simple dollar cost average strategy into the SPY, but specifically focuses on buying the dips when it's on, you know, on sale, if you will, right? Whereas if I had only had been basically buying this when it goes into buy moves or when it goes above the 50 SMA, I'd probably be having a negative return in comparison to the year-to-date returns of the SPY. So it'd actually be worse if I weren't buying it when it was on sale. So essentially by making sure that I'm always adding when the markets go on sale, currently with the markets being down as much as they are over the past couple days, we're still matched with the market and pretty much almost have an equal return to it. So that's by focusing the energy of the contributions specifically on down days and sell moves there. And again, that portfolio there, the simple dollar cost average one, is really just a case study for myself, for you, for pretty much everyone on the internet, which, so yeah, I mean, anyways, so that's meant to be going on pretty much until the day I die, and then, you know, everyone can on the internet can use that as a case study for pretty much this exact strategy. So it'll be interesting to see if over the long term it ends up somehow beating the market, which I wouldn't expect it would, but it should keep up very close with it. It's possible. I don't know if it's really possible though. I mean, how could you beat the market over the long term? I don't know if it's actually possible, even if you buy things on sale. So that should be pretty interesting. Yeah, so super busy day here on the program. I must be dealing with Wall Street experts here in the stream because yeah, no one's ever got any questions. No one. It must be just all straight professionals. Bitcoin's doing pretty much everything we'd expect it's doing, holding support, bouncing a little bit, no surprises. You know, market could also very well be working its way up towards, you know, 682.57. That would also make, you know, some logical sense on the day. It doesn't look like we're able to fully get the pullback target for the day, which is fine. Also, too, if you guys look, SPX, right, you guys will see we hit the 161 target. So you can see we did the same thing as yesterday. We measured the gap, right? So we can have an expectation of where the market can go, right? So if you look at yesterday, we measure from yesterday's open to the previous day's close, you'll see that the market did what? It pretty much, the market bounced a bit and then it sold all the way off to the 161, which is right there, all right? Now, if you look at today, we did the same exact thing. It's just opposite because it's a gap up. So the market gapped up. So what do? We measured from the open to the previous day's close, and now the market has gone up to the 161. So from yesterday to today, the market has successfully used the kind of gap down and gap up, or just the overnight gap Fibonacci strategy, in the sense that the gaps have respected and traded in the direction of the gap enough so to complete the 161 extension of the overnight impulsive gap. So what's that mean? That just basically means the markets are moving, I would say, in good function. They're functioning well. It might seem random to most, but so far the market, for 2 days straight has pretty much moved perfectly. Whoa, what happened to my stuff there? I don't understand. How did... There it is. Weird. Must have accidentally clicked it. So yeah, there's really not a whole lot more to say there other than markets are doing what I'd say they should be doing. Our next long target up is going to be $682.62 now. Remember, the market is in a neutral to bearish state. That does not mean the market won't go up, right? So if you think, right, so market is bearish below 50 SMA, down. Then what's it do? It bounces a bit, then goes down, and then we bounce a bit. So right now we are bouncing in a neutral to bearish environment, seeking out potential resistance. If at some point the market eventually recovers all the way up here above the 50 SMA, we would say it's into an uptrend. All right. So right now we're just in a neutral to bearish state, doing an oversold bounce, an oversold reversal bounce, whatever you would like to call it, doesn't really matter. Market's just going up in a neutral to bearish state, and we have price targets for that bounce to arguably continue as high as the price is $682.62. So if the price hits $682.62, you can finally comment on today's YouTube stream and say, have a great day, Connor. Or you can just stay completely silent. I know it's tough to type when both of your hands have been cut off. I understand. I probably wouldn't be doing a whole lot of typing myself either. So I hear you and I understand. And on that note, I am going to go get a coffee. Yeah, I'll see you in a sec. right, so market is going up. That's crazy. Oh my goodness. What is happening? Who would have thought? Alrighty. What's going on the prediction markets for good old shitcoin? Whoa. All right, so market is going to go up to $682.62 here before we know it, is the way it would appear, because probably just luck. Or maybe that's just what the market wanted to do. I don't know. Bitcoin's price today by 5 p.m. above 89,750, above $90,250, 5 p.m. Man, I wish these bets were a little different by like days. It'd make it a little bit easier. But it is kind of fun doing prediction betting for the price of Bitcoin. I've done it a little bit. Yesterday I hit a 233% bet, which was fun. And I mean, it's relatively cheap, so it's kind of more just fun, I guess, if you will. But it is interesting to see kind of how the prediction markets are stacked up and what people are thinking. Alrighty, so SPY has gone up to our next price target of 682, 84, 81. Well, it's only gotten to the 70s, but it doesn't really matter. Now the question is, can we get a big pullback here? That's the real question. Is if we can actually get a pulley magoo. What time is it? 9:59? Yeah, we'll see. So yeah, essentially, this is this can be where big resistance is found. We'll see if the market wants it or not. So this is the way I kind of, to put it simply, would read this market now. Now with this getting up to 682.80, is that this basically becomes a potential resistance, and or this is where shorts can start to squeeze. So it's kind of like one of those, it's another one, that's how I read this, is like, that would be the most simple way of reading, is if the market just stops and comes down versus goes up, pulls back, holds above, and goes. So we're at, call it an inflection point. So the only way I can express is this is the key volume level of the sell move, right? So I mean, you guys are seeing it as a volume weighted average price coming down, right? So if you look at the volume weighted average price, so I mean, it's pretty much this, right? So market broke down the 50 SMA, went into a sell move and down. The key volume trend is right there. We just retraced it. All right. So either this is going to be a big resistance. Well, doesn't have to be, but yeah, that's pretty much what we read. Is the market is counter retraced back to a potential resistance. Now the market can get hit down, and if it does not get hit down, then we're more susceptible to starting to actually squeeze the market back up, because this is where the key volume trend is at. So I don't really care one way or the other what happens, but that's just where we're at right now. And so another way to visualize it would be if I take the anchored volume weighted average price and I go like this, right? You're going to see where we at. We're kind of getting to the top volume shelf of the volume profile of this last drop, right? So if you just think about everything that's happened from where I'm highlighting this box, that green box I just drew, right? So if you take all the price action that's happened from there to there, the biggest volume is on the absolute low there and essentially right here, which is where? Which is right where that volume weighted average price level is at. Hence, if we stay below this, resistance remains, and if we start to clear house above this at some point, that's where the vacuum and the squeeze can take place. So that's pretty much how we read this market right now, is that it's, you know, if we just had to be simple, it's either literally just hit resistance, continue down, in whatever pattern it wants, or we start to actually get above, whether in the sooner or whether it be later, and establish above, and then we go up. All right, so that's how we read that now from that point. So, you know, so as we mentioned, you know, a couple, I don't know how many minutes ago that was, 20 minutes ago, 15 minutes ago, about how the price would, we have the price target of 682.80, so we've met the price target. And yeah, now we're just going to basically see if resistance comes or not, and that's pretty much it. See, like on good selling algorithms and selling programs, what'll happen is we'll bounce the market like this right to where we just bounced to, and then we just go into a mega short, right? So if we can just go into a mega sell-off or a mega short, that would be sweet, because that's, I mean, that would just be cool. Why not? But, you know, it's, and the reason I say it would be cool is because, you know, not that I like seeing the market go down, but it is fun when we are in a true selling program or bearish algorithmic selling move, and we do these big counter bounces and everyone thinks the market is turned back to a long, and then we just roast them back down. Those are always really fun to like be a part of and see and witness. They don't happen as often because, again, markets tend to go up more than they go down, so they're less likely, but when they do happen, it's fun. All right, so we're just going to see. And if we did end up rolling the market here into a short, then generally speaking, I mean, there's a couple things we could target back to the downside too on the short, which would be like the 10 SMA. That's all the way back down to 679.87. So if the market's like does something really fun today and rolls us into a mega short, we would look back down to the 10 SMA. Best case scenario would be all the way back to the previous lows. So if you throw on a short position like so, then best case scenario would be all the way back to the previous low. And if the market actually pins to here, the risk would be pretty much non-existent. So we'll just see. We'll just for funsies, right? And I actually put on a little bit of SQQQ here on this top. In the event we do top, I'll be long SQQ, so I'd be short the market, but long SQQ, if you will, just to see. I don't really care if it goes down, or I mean, I would like it to go down because then I'd actually win some money. But if we don't, again, it doesn't actually matter because it's not like I'm going to go broke or be poor or be out on the street tomorrow because I win or lose this trade. It will make no difference in my life, probably. But it's fun to test. We'll see. What am I doing? That's what I'm looking for. Yeah, so if you guys do remember too earlier, what I remember I said, I'm like, you know, I'm like, you know how we're in a neutral to bearish state? I'm like, there's no point in being short all the way on this low, right? Because it's in a what? A lower low, lower high, lower low, lower high formation, right? So you're seeking out a bounce back to a potential resistance. So I've chosen this as a potential resistance area. So we'll see. like I said, you're more likely to, well, markets are, again, more likely to go up as opposed to go down. But like I said, we'll see. It's fun. Another bad one there. Personally, I'd like the market to go up because then obviously 401k and M1 and retirement accounts do significantly better. So at the end of the day, it's like you kind of do want it to go up, but in the short term, a little pullback wouldn't hurt no one. So you're going to take that off. I'm actually going to start looking at some of the 1 minute price action here. So that's an area, it's just straight running up. Yep, so current level that would need to come down is that before anything fun even comes close to happening, and that. So we'll just increase that to there. Like so. Bitcoin, look at you go, girl. Man, who would have thought that this was going to be a support level? I mean, man, crazy. Oh, yes. Man, 3 people on the stream. We are just absolutely crushing. So also, too, if you look at the extensions today on the Fibonacci, so if you look at the overnight gap fib on SPX, you'll see that we're also running into the 261 extension. So it just so happens that today's overnight gap Fibonacci 261 lines up with the S&P 500 or SPY sell signal volume weighted average price. Excuse me, at 682.80. Does that help us? Maybe. When I say help us, I mean like help us on the short. Excuse me. Let's see what the volatility index is doing too, because that'll help. Wait, where did that go? Back here. What? That's not it. Where'd you? Oh, you're over here. Alright, so SPX. So the other thing too is SPX still has... Okay. Got it. So if we do not hold resistance at the sell signal VWAP, then if we don't hold enough resistance here, that means we're going to take VIX down to 1724, and then we'll have to reuse VIX at 1724 to potentially top the market. I don't know. We'll see. One thing at a time. 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 Okay, maybe not. All right, because Bitcoin up 2% today. Not too shabbies. These. Okay. Oh, that makes more sense. Yes. Maybe I should do it like that. Alright, so in the short term, what we're going to do is we're going to look at the volume weighted average price off the high of this move. And pretty much as long as the market, for the most part, remains below the 1 minute volume weighted average prices off the high that we created and keeps lower highing, then we're fine, right? So far it's working. Does it continue? Again, I don't really know. I don't, whatever, but it's just, again, high, tops, down. Next view absent sequence is there. So you pretty much would read it like this. As long as it's below that box, it's fine. If we clear that box, then we're just going to shoot right back into the price of 682.80s most likely. And then again, some price levels for the downside that maybe need hitting if they haven't already would just be the previous. Say where you got that one, so the next on deck would be that one. We got that one, so next on deck would be that. That one, which still needs hitting, and then all of this. So this would be our downside destination for the short. Well, pretty much we've already hit a few of them. What I mean is, any volume weighted average price on the downside would arguably be, a destination point. But this would be, maybe a stronger one too. It'd be nice to see that. So, if we can end up rolling the market down to here, that would be cool. But that's arguably, this would be how the market is set up right now. Those are really your two options in the short term, I think. So the short has worked in the short term, but not turning into a big rolling breaking down move, if you will, which that's all right, that's fine. Doesn't mean it won't later, but yeah, we'll see. All right, what's going on here with the old marker Magoo? Okay, so we can take a date off. We can take a date off. We can take a date off. Well, don't really get to take that off, but clean this up a little bit. Something like that. Oh. $90,000. Back to the old 90K, huh? Man, look at that bouncer Magoo on good old Bitcoin. SLV. Getting hit with the spanker Magoo this morning. They love manipulating that market on the futures, huh? That's funny. Oh man. Oh, it's chilly in this room right now. A little chilly. Let's see. We're at 10:25. Man, market is market's doing just fine. Market is doing it just fine. Let's check our DO. Okay. Good morning, Connor. Or good morning, Oliver. I just read your comment back to myself. Good morning to you. Good morning. Good morning, sir. Yep, so right now we're just basically chopping around this top. Yeah, I mean, we're just not getting instant, selling reaction. That's completely fine. I mean, we already got the instant reaction, right? So that's the idea of making sure you pick somewhat decent levels so that you can, you guys know. We don't got to talk too long on that. But, yeah, we're just not getting a, big rolling over action, which is fine. It's honestly to be less expected, as you guys know. The markets naturally go up easier than they go down. But anyways, yeah, so let's just see how close we are to our 50 SMA now. Is there even... Yeah, we still got some time. The market, even with this whole long move up, is still in a neutral to bearish territory. We still haven't transitioned above the 50 SMA. So, I mean... The reality is we're still not onto a swing long market. We're just on an oversold bounce for the time being. Alright, just an FYI, so I've closed this short. I'll re-enter if I think I should. So I took a little money as we were correct and just took the rest off because, well, I should actually probably keep up that one note too, because this can be the potential start of a short squeeze. Or rephrase that, start of potential. Damn it, potential short squeeze. Oh, damn it. Squeeze. Alright, so, I don't really need to review it, but it's pretty basic, right? So market came up into a level that we liked, added short as the market came into it for the first time. Alright, so market comes up into, we add bearish, market goes down, we take some money, market does not hold lower highs, does not roll over, does not start a big boom down, market goes back up, holds lower highs, gets over level, we can stop out and reassess and enter back in if need be, right? So pretty straightforward there. It's always about first tags as the markets come into your levels for the first time. Just like on Bitcoin. All right, if you look at Bitcoin, where's our support levels on Bitcoin? Bitcoin support levels are these red lines right now. So what happens, right? Market sells off into, you go long. That's a first tag. This would be a second tag, but anyways. All right, so that's always, generally speaking, how the best trades in the market work is when the market first comes into your levels, you trade opposite. So when we look at the market today, we thought, you know, this could be the start of a good short and or a rolling breakdown, whatever you want to call it, right here at the price of 682.80. So what happens? Market comes into 682.80. We go short. Market goes down. That would be a first tag. This would be second, third, fourth, fifth, however many you want to count it now. So we're no longer bearish at that point because we're only bearish into the level. And then if it doesn't respect the way we want, we can always reassess later. So, and then side note too is because I also know that this is the start of a potential short squeeze level, right? So if the market wants to do something crazy, it can do it now that it's coming through this level. Because what we know is as the market comes up through the price of 682.80 today, we're starting to get above the main volume weighted average price of anyone who's participated on the sell side or short side of the market for the last couple days, right? So if we look, yeah, I mean, you guys know, I mean, it's pretty straightforward, right? We had the sell move, right? So you have your, sorry, let me get into focus here. All right, we had our breakdown. That's our bearish sell trend, right? And now we're starting to creep above it, right? So if the market does not get back below this, then the market will most likely go through a short squeeze reversal long push, at which point we will then take the market up to this price target. So our new price target for the market is now $686.82, with the market being over 682.87. So I'm going to delete some of these drawings, and now we're going to put forth new analysis in the sense that this is kind of what we expect and kind of very likely outcomes is that we will now look for pretty much like these kind of 2 or 3 scenarios, which is we would only be bearish if we were back below. Otherwise, we are long now up to here. And in the shorter term, the pullback destination will be back to this level. So that's kind of like, that's really how we would now read that market is as long as price action is now above 682.80, we have the opportunity to run the market all the way up to $686.82. And then obviously, if the move doesn't just break out and go all the way to 682, which would be wild, but if it doesn't just do that, then we would expect that the pullback is going to be back to test our previous, oh my goodness, computer, previous break spot. So pretty much this is how we're looking at the market. I'm just going to keep it on a 1 minute. So this is pretty much it. Price target is up to here now. And pullback price target is down to here. And we hope that the market A just goes straight up to here like that, or pulls back and does this. But that's pretty much it. That is now how we view the market. So remember, we were initially bearish when it first got to here, because that would be the lowest risk to be bearish in that moment, is just how it works, right? The market goes down. Enough to make money, not enough to make killer money. Market does not hold a lower high, it goes up. Starts to breach the level that we know can trigger a short squeeze. So we start to get above, we close because we know it can be a short squeeze. And now the market is squeezing. And we hope that that market squeezes all the way up to 680, 682. I don't really think it's going to happen today, just because the move would be astronomical for the day. But I have seen those things happen from time to time. So fingers crossed we get something crazy all the way up to 680, 682. The more likely scenario is that the market ends up probably pulling back all the way back to 682.80. But again, I've seen it both ways so many different times. That's why I've mapped off the scenarios for you, because again, I've seen it so much. What did I just do? Kind of liked that. It was a little highlighter. How did I do that? I have no idea. I'll have to look that up later. But yeah, I've just seen the scenario too many times that, again, there's only two things that can happen in the market. Number one, things going to go up or go down, right? So from there, just pick a couple price points the market's most likely to go to, and then it's going to happen, right? So it's pretty much all there is to it in that regard. So our two price targets, like I said, right now are pretty much to here, back down to 682.80. Or the hopeful target, which is this thing just squeezes all hell up to 686.82. So that's pretty much, that's pretty much it, you know. And then the best case scenario would be, well, I don't say best case, but just in general, you back up to there. Oh gosh. Ugh. Now, obviously, remember too, we discussed, I think a little earlier this morning, that yesterday and just in general in this downturn, we added long to our long-term portfolio. So while the market would be on sale these past couple days, we added some long to the longer-term portfolio and case study portfolio. So obviously, as this market continues to go up, everything we bought over the past, well, yesterday, starts to appreciate, which is good. So, you know, though I took a short-term bearish bet here, you know, I would love for this just to keep going up, because everything we bought yesterday is now appreciating in value, and then everything we already hold is just appreciating in value. So obviously, as the markets go up, it's always a good thing. Right? So, you know, like a lot of times you'll always hear me say, I don't really care what happens to the price action, whether it go up or whether it go down, because if it goes up, then all my long-term stuff just makes money, right? If it goes down, then arguably you can buy more. Or if you want, you can take a short, right? And try to make money that way. So regardless of which way price action goes, it really doesn't actually matter one way or the other, you know, because eventually things recover, you know. So, you know, when you have multiple different accounts, you know, you can trade some short, you can trade some long, you can hold some long, etc., right? So I don't just look at one account that I have as the be-all, end-all account. Essentially, I just try to manage my money as best as I can across all of my investment accounts in any way, shape, or form and whatnot that I see fit at any given moment in time. So, yeah, I wouldn't have mind for the market to go into a big short there, because the short-term trade would have done decent, right? And if the short-term trade doesn't work and we go up, then though the short-term trade didn't work, all the long-terms or whatever we've been buying the past couple of days, those are all working, right? So one way or the other, whether it be going up or go down, we can participate or have some sort of active position on the market. Oh, I don't know why I deleted that line. It should still be up there. Oh gosh, I'm tired. Oh no, Bitcoin. Morning, guys. Sorry. Holy cow, the market's going up. That's crazy. Who would have thought? And today's a great example how, you guys can hear me always preach to you, hey guys, we're in a neutral to bearish environment, right? Now the average Joe would wake up today and watch our stream and go, Connor said we're in a neutral to bearish state, and look at the market, it goes straight up all day. What an idiot, right? Without enough context, I guess. Yeah, right. So today's a great day. How you can see how we're in a neutral to bearish environment as it relates to simple moving average calculations, and you can see how I even say we're in a neutral to bearish state, and at the same time I'm still directing the price of the market upwards to specific targets, because the market is not linear, I guess. It doesn't just follow one thing, right? So, there's different strategies and different edge and blah, blah, blah. And so, if you go back to this morning's stream, you would hear me say earlier today, I had mentioned, hey guys, the market's in a neutral to bearish state, which means lower low, lower highs. Right? Therefore, there will be bounces and there can be reversals while you're in a neutral to bearish state. But it's only when the SMA is recovered that you enter a true, you change the structure of the market, right? So we're simply in a neutral to bearish SMA calculation, but doing an oversold bounce, seeking out potential resistance, and or if no resistance is found, looking to then change the structure of the market back to a positive market. So all we're simply doing today is bouncing what we would determine is an oversold market within a neutral to bearish state, seeking out potential resistances on the way up, and if none is meant to be found, then we keep going up. And you saw me do that, right? You said, hey guys, we're going to go to here, and then we're going to look for some resistance, and we got very minimal resistance, right? And now it's just back up, right? So it's an oversold bounce, seeking out potential resistance in a neutral to bearish state, and if none is to be found, it keeps going up until we get to the next resistance points, etc. And or until the market recovers into a buy move. So, anyways, market's putting in a phenomenal day. How awesome. Love it. All I gotta say is I'm glad I bought the dip so far. The old dippy. They call me the Dipper Magoo, 'cause I will dip onto you. Such a loser sometimes. They call me the Dippy Magoo, 'cause I will dip on you. Whoa. Wow, wheel. Oh, that would be so awesome. Who went all the way up to 686.92 today and really just throw everyone for a complete whirlwind of a day. Now, do you remember that with where we're currently at in the market, this is how we would read the market in sort of a bigger picture. There's like a bunch of 1 minute stuff I could do, but in terms of, say, our sell signal volume weighted average prices and upper distribution volume weighted average prices, etc. This is how we would currently read the market. So if you were to buy right now on the market in the hopes that it goes to $686.80, you would also have to be willing to accept that it could still sell all the way back down to $682.80 and then go up, right? Like that. Or you could just look at a bunch of 1 minute things and use 1 minute structures. Literally, it's whatever you want to do. It's whatever you want to do, baby. Right? So you could throw some VWAPs here and on the way up, and I can already tell you right now, this is what the market's following. It's following 1 minute higher low structures for the moment. Oh, don't want that like that. Hold on. change this. This guy there. All right, so we got, if we go to each last 1 minute dip, ready? So there's a higher low. You go to the last 1 minute dip, right? There's your higher low. You go to the last 1 minute dip, and there's your higher low. So right now it's just following a 1 minute VWAP structure up, and it will just basically keep going up as long as that maintains, right? So, you know, when we just said, hey, you have to be willing to accept all the way down to here, it doesn't mean it's going to go there. I mean, if you look what it's doing, it's holding 1 minute volume weighted average price structures on the way up and creating higher lows, meaning as long as it does that, of course, it's never going to come down here, right? Now, does it do that? Does it break down? I mean, who knows, right? But at the end of the day, market's just moving up for the time being. I don't really see a reason to be short at this point in the immediate. So we'll just hopefully watch this continue to rally on up all the way to $686. It's also 10:52, so that means I'm going to be logging off here pretty soon. And again, all we can really do is just kind of fingers crossed the market continues rallying all the way up, 680, 682. Yeah. Now, granted, if we do go all the way to 680, 682, then we definitely would not want to be long biased the market on the day when it gets to that price. That would also most likely be an area where we could look for like a short-term, temporary, like top or pullback, you know, if you will. So, that's weird. Oh, I see why. But yeah, so like I said, up at 680, 680s or so or whatnot, that would also be like a little bit of a short-term top area you could look for. Like I said, you know, this thing still can arguably sell all the way back down to 682.80. So, anywho, that's that. Bitcoin. Well, I'd say it's been another spectacular day here on stream. We have so far predicted the price action of Bitcoin pretty good, predicted the price action of the largest globally traded stock market pretty good. I would say, yeah, so I don't really know how much more we can do for the day. Not a whole lot more, but maybe, like I said, up to 686, that would be sweet. Silver. Would be nice to see silver in the $100 area. One's got to start asking the question, should we be looking at selling a top on silver soon? Selling a top, more like shorting a top. That's the question we must be asking ourselves now, is does it make sense to be looking at some shorts on silver here as we get into the +3, +4 standard deviation, and if so, what sort of fashion would we like to involve ourselves in? Silver futures, ETFs, options. It's probably the only, yeah, I don't really think there's any other way. Yeah, silver futures, ETF, options. What's going to be the best? You never really know. Might sell some call premiums. Obviously, those are going to be up, so that could be an option. Selling call premiums up here. Don't know if you really want to buy puts because you know the volatility is going to be juiced up, so they're just going to scam you on that. And if you don't time it perfectly right, then you get crushed. So it might be better to be a premium seller as opposed to a buyer. But that decision can be made at a later date and time still. So we'll see. I'll let you guys know if I do something with that. I haven't really decided yet. But it is in the back of my mind. Kind of the bigger plays right now in the back of my mind are a Bitcoin dip at some point, and maybe selling a top on silver. And then obviously having a more of a defensive position going into 2026. That's pretty much it. Like I said, I've kind of leaned a little bit more defensive into 2026. And then the bigger plays I'm looking for are going to be a Bitcoin bottom and maybe a silver top. And then all of the random just stuff in between, which is maybe trading some penny stocks here and there, taking some trades in the market here and there, you know. But the bigger stuff is, again, arguably silver, Bitcoin, trades, and then all the random stuff we do in between on the markets here and there. Which, I don't even know if, let's see, I haven't checked yet this year. I think I'm barely beating the market on my small trading account here. Let's see. Haven't done a whole lot in this account this year. Haven't hit any really big trades. It's all been just kind of little nibbles here and there that have kind of worked out. Alright, I guess I am beat the market okay. You know, I just don't understand some, you know, like right now on Charles Schwab, it says the performance of the market year to date is negative 0.65% return. But then when I go to M1 Finance, see, these are the things that I just don't quite understand about the world. Literally, when you go to, why is that being stupid? Invest. When you go to M1 right now and you do benchmark performance, right, and you add SPY, it says the market is up 0.92% this year. And then you go to Charles Schwab and it goes year to date, S&P is red, 0.65%. So now I'm over here like, what? And then if you look at the rate of return on my small account, it's only 0.56% so far this year. And then, but on the summary page, it says it's up 1.26% year to date. So again, I mean, obviously I could do quick math and figure it out myself, but it's just like, what is up with all the differences between platforms? I don't understand. So, again, not really sure why all these different brokers seem to display different rates of returns. It doesn't make a whole lot of sense, but okay. I wonder if it has to do with time weighted or money weighted in some of these things. Probably. Weird. Well, anyways, that was a good day. I think we predicted markets pretty well so far today. Did it with Bitcoin markets. Yep. Overall, made some money today too, so that's always a bonus. I'm happy about that. UPRO's doing well. And a couple little random penny stock buys, and not so well. That's okay. Alright, well, I guess I'll catch you guys back tomorrow morning, bright and early, as per usual. Don't be too chatty tomorrow, and we'll see you on the next one. Cheers.